Welcome back to Retirement Coffee Talk with Sharice Rivers at Zinnia Wealth. Online, you can find us at zinniawealth.com. Hope you do. ZINNIA wealth.com. There's a lot of things to scroll around. You can see there's a tab there that says education. You can click on that. And when you open that up, all sorts of different guides that you can download. Tool around there a little bit today. ZinniaWealth.com. All right, so we talked about, diving into your portfolio, looking at what you have right now and wondering, am I in the right place? Well, one of the things that you might find, and you will hear this when Sharice does the analysis of your portfolio, that there are fees that are associated with what you are doing, even just in a 401k. And I've got a study in front of me that says the average American worker will lose $93,000 in hidden 401k fees. That's a lot. That is a lot.
It's a lot.
Now, when I mentioned Vanguard a little bit there, so I'm going to go there. Jack Bogle is the guy who started Vanguard, and he was a guy who he thinks fees are the enemy. And so he talked a lot and did a lot to try to keep fees down. Here's the late Jack Bogle.
Do you really want to invest in a system where you put up 100% of the capital, you the mutual fund shareholder? You take 100% of the risk, and you get 30% of the return.
That doesn't sound like a good system.
No, it's what we lack. God rest his soul.
Yes.
But he was right. He really did change the industry forever, and this more and more people kind of went that direction. We are one of them, and there's a couple other firms out there that did that as well. So fees. It does make the world go round, but it shouldn't make your world go round.
Yeah.
And I say that because there's a lot of you out there listening right now, and there's probably 4 different types of listeners right now. So the fee depends on what you want out of your advisor. So if you don't need tax planning or estate planning or insurance planning or a family office type of deal, you probably can manage your own money, because if you're just doing the buy and hold 60-40, I mean, shucks, let's go pick a couple of Jack Bogle's funds and you're probably ready to rock, especially if you don't need the money. But you pay for what you get. You get what you pay for. And, we do advanced planning, and doesn't mean everybody that comes and sees us needs advanced planning. But I will tell you this much. Let's say you have somebody come in and you're over at Fisher Investments and they're charging you 1.25 to do nothing. They're not doing any tax planning, estate planning, any of that kind of stuff. That type of portfolio in our office is 0.5, right? But there's actually a lot more going on. So the fees do matter. Just because somebody's really great at marketing doesn't mean they deserve a 1.25% fee to sit there in a buy and hold type of strategy portfolio, right? So why do you go in and go to an advisor that charges fees? It could be a lot of different reasons. Some people come in and see us, Randy. You have a husband and wife, and the husband, on average, is typically older. And they know that they take care of the finances. And sometimes a spouse will do the bills. But they know if they pass away and their wives are left with the finances, they don't want an advisor to come dupe them or rip them off. So people are implored right now to come in and find an advisor for that surviving spouse, to make sure that they're confident with that person's communicating with them. So people are willing to pay a fee to have that relationship ongoing, but they still want to keep their fees down. The other types of people out there are saying, Sharice, I've been high risk. I want to be a little bit safer. How does the fees change when we go down this road? And so depending if you have a lot of risk money or a lot of safe money, more than not, the risk money that you have out there, it does have a little bit of a higher fee. But if you are transitioning to a safer managed portfolio or allocation, your fees should be absolutely probably cut in half or even more. So it depends on what you're looking for, that season of life. Is for spouse, if you're lowering your risk. It depends on so many things when you're looking at advanced planning. Some offices, and we do this too, have flat fees, right? And flat fees are great. But people really do want an active managed portfolio or more of a strategic approach. And they want to know we are there if the spouse passes. They want to know we are there to double check these estate plans. They want to know we're there when there's an elder planning issue, because they know we're good at that. They know we walk the walk with clients and with our elder attorneys and the long-term care part of the world. They know they're always going to need some sort of insurance. They want to work with us. There's just so many parts to what we do here. And so you guys get to choose, and you get to choose the advisory firm you want to work with. I do say be cautious of fees. I mean, if you save 0.5% in fees over the next 30 years based on $1 million portfolio, that is so much more money back in your pocket.
Yep.
If you save one, it's incredible, Randy.
Thanks for listening to the Retirement Coffee Talk podcast. If you have questions or would like to begin the process of building a tailored retirement plan, call Zinnia Wealth at 833-368-3680 or find us online at zinniawealth.com.
Investment advisory services offered through Zinnia Wealth Advisory, LLC, a registered investment advisor. The firm only conducts business in states where it is properly registered or is excluded from registration requirements. Registration is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. Insurance products are offered through Zinnia Wealth Management, LLC, Florida license L078655, and Sharice Rivers, Florida license P037744. Zinnia Wealth Advisory, LLC, and Zinnia Wealth Management, LLC are affiliated entities. The information presented is believed to be current. It should not be viewed as personalized investment advice. All expressions of opinion reflect the judgment of the presenter on the date of the podcast and are subject to change. The information presented is not an offer to buy or sell or a solicitation of any offer to buy or sell any of the securities discussed. You should consult with a professional advisor before implementing any of the strategies discussed. Any legal or tax information provided in this podcast is general in nature. Always consult an attorney or tax professional regarding your specific legal or tax situation. Any client experience discussed on this show are unique to that client. Annuity and life insurance guarantees are subject to the claims paying ability of the issuing insurance company. If you withdraw money from or surrender your contract within a certain time after investing, the insurance company may assess a surrender charge. Withdrawals may be subject to tax penalties and income taxes. Persons selling annuities or other insurance products receive compensation for these transactions. These commissions are separate and distinct from fees charged for advisory services. Insurance products also contain additional fees and expenses. Social Security rules and regulations are subject to change at any time. Always consult with your local Social Security office before acting upon any information provided herein. References to specific investments should not be construed as being past specific recommendations. The returns for various indices discussed in this podcast do not represent the performance of the firm or any of its advisory clients. Returns do not reflect the impact that advisory fees will have on an investment. Past performance may not be indicative of future results. All investment strategies have potential for profit or loss. Different types of investments involve higher and lower levels of risk. There is no guarantee that a specific investment strategy will be suitable or profitable for an investor's portfolio. Historical performance returns for investment indexes and or categories usually do not deduct transaction and or custodial charges or advisory fees, which would decrease historical performance results. There are no guarantees that a portfolio will match or outperform a specific benchmark. Investments in fixed income products are subject to liquidity risk, market risk, index rate risk, credit risk, inflation risk, purchasing power risk, and taxation risk. Because bond prices fluctuate continually, their yields change constantly.